What's up, data? So let's do a complete updated multi-time frame analysis of gold. Let's see what kind of trading opportunity we have in this instrument. Now, gold on the intraday or 4 hour time frame, we see a significant trading opportunity. Now, before we discuss what it is, let's do a complete multi-time frame analysis. Then we'll come back to this time frame to see how we can trade gold. Now, first of all, let's see the bigger picture, monthly perspective. Now, on the monthly time frame, what we see that gold primarily previous months has created this bearish candle. Why? You can see that there is a narrow body red with a long wick at the bottom. So this is basically an impulse correction. After that, we have seen a significant retracement in this monthly resistance, and we have seen that gold started to drop again, so which is a strong bearish price action. We can see that this is the monthly resistance where we have seen a rejection at this point. Gold below this monthly opening and closing, which is another level of resistance, and we see that gold is now bouncing back down. Looking at the weekly perspective to see what kind of price action we have now on the weekly, as you can see that there was a this weekly price action is in fact a very strongly bearish clean price action. You can see there is a double top formation has broken down, followed by this retracement and consolidation to the upside, another drop followed by this retracement. Now we see that in all this movement the price has basically an impulse on the weekly followed by this correction. So if we take our Fibonacci from the high to the low, we see that gold has retraced exactly 61.8% Fibonacci level, which is considered as golden ratio. Now, with that in mind, after the previous week's close as a very strong bearish engulfer, we see this week, as expected, first came down, went above, tested this important monthly opening and close, important level of resistance. Now, from here, we see that gold again rejecting down. That means that we could see potentially a drop on gold as long-term market is bearish. Now, daily perspective, uh, as you can see, there is a strong impulsive move on the daily time frame the same way and corrected to the 20 period moving average as well as to the monthly important level of resistance. And from this monthly resistance, we see that gold has a rejection. So if we take our Fibonacci on the daily perspective, we can see that from the high to the low, gold has retraced exactly 50%, which is the monthly opening and close, and we have seen a rejection. So we can expect gold to continue to drop in this direction on the daily perspective as well. Now, if you look at the 4 hour time frame, this is where we see that there is an impulsive move to the monthly resistance, strong rejection with this red bearish engulfer. It's a very strong bearish engulfer, followed by this green candle retracement, and a couple of candles we have seen series of lower high has been created on gold. So this is a very strongly bearish price action. As you can see, every candle is creating a series of lower high, except this current candle. What we see that it has basically crossed the previous candle's high, grabbed the liquidity from this doji, and now looks like that this candle is coming down to close as a strong bearish engulfer. If this is the case, that if the candle closes as a bearish engulfer, if the price action looks like bearish, so we could potentially see that gold might continue to drop from here to continue its long-term downtrend. So with that in mind, if the price action shows us proper entry point according to the rules of our strategies, we'll consider shorting gold from this zone with a high risk to reward ratio with our students. If you find value in this analysis, then smash the like button, and also don't forget to drop a comment below to help this idea. Thank you for watching. See you soon in my next analysis.